Today, we'll review what lessons were learned and, more importantly, how shareholders can take action now and ensure true ownership so we can be even more powerful the next time this happens. Alexandra has brought with us two important guests. We have Chives, he's a US investor, and Bibik, an investor from the UK. Both are here to share more about how direct registration can help. And you can learn more by visiting the website WhyDRS. Welcome, everybody. Thank you so much for joining us.
Thank you for having us.
Glad to be here.
So thank you very much, Alexandra. You guys have done tremendous amount of work. This is incredibly, incredibly important. So I appreciate that you took the time and invited both Chives and Bibik. So my understanding, Chives, you're an investor in the US, and then you've been learning about blockchain, and then you learned from all this about direct registration, and you've really been on trying to spread the word already, and I'm glad that you have been doing that. So you've built this website, WhyDRS. It's a nonprofit. It's free. And you're going to teach us a little bit more about why, how some Tesla stock owners actually think that they own it, but they don't. It's going through some sort of organization. You'll explain more about that. Bibik, you're from the UK. Similar things, right? You voted in that shareholder meeting in 2022, and then you had troubles there. So you have your shares in 5 different UK brokers. So you're going to need to explain to us a little bit more about how it is that for even those 5, you couldn't even vote one of those shares. And that's what we're going to try to do today, right? Is figure this all out. Thank you both very much.
Yeah, they've been great. And they've been great helping me setting this up. So obviously we took the lessons that we had from this work Proxy vote, but then very quickly, one of their team members, they're all, people, just normal investors, retail shareholders, having learned their lessons, now sharing with us what they did. And if Tesla shareholders, because we're so many of us, 10 million, if we learn these lessons and do something, we can actually really change something in this financial market. And so I want to make sure that people hold through. I know we're going to have for about an hour today. It's going to be quite theoretical, but we will try to spice it up as much as possible with practical advice. And there will probably be follow-ups of this one video. But I want to make sure we start with the beginning, which are the lessons that we learned from this proxy vote. So
let's go ahead. But first of all, I love this. This is don't mess with Tesla retail shareholders. The Tesla retail shareholders, as you said, is 10 million strong, and it's quite powerful. But if we did not mobilize, if we did not get together, what happened with a judge, this advocate judge trying to do something, we were able to, at least on our side, prove that we can get the votes in place when we need it. That's why it's so critical. So tell us more about the lessons learned. Yeah.
Sure, with pleasure. And I mean, the last 2 months have just been wild, right? From the moment we got that proxy statement, end of April, to the vote on June 13th. And now the analysis of what we could not do while we were doing it, we had to wait what really came out of it to see how this all worked. So one very nice sign of our success was obviously the banner we put up at that shareholder meeting where so many of the attendees signed, including actually board members, lawyers. Everybody that was there has signed on this. This is still standing in Tesla headquarters entry hall. I hope they put it behind glass or something, because I think this is really a good way of showing the success we had. Now, to get to this success wasn't easy, because by voting very early, lots of people realized they could not vote. So if you want to go ahead, Herbert, we go through these widespread voting difficulties. Many banks and institutions made it really complicated, and we've done surveys during the period where people could vote and after the period, and those are the results. So during the vote, we had 3,366 participants, and don't worry if you can't read this, because those slides we'll publish them, mainly in the Scandinavian countries, in Europe, in the UK. So by country, it was actually most of them in Germany. Second was the UK, Sweden, some United States. Those were the ones we could solve the easiest. Switzerland, Norway. So that was during the vote. We did a survey on SurveyMonkey, 3,366 participants with more than 40 million shares. So we'd asked them a number of shares they were holding at that moment that could, during the vote, so that was about 3 weeks in, not vote. And then Obviously, by publishing this, by Elon's support, the dam broke. Some of these institutions put a one-time solution in place. But when we realized, what does it mean? Why can you do it one time and can't do it always, right? And that's sort of started triggering us asking the questions, right? What is happening that suddenly you can do it at one time because there's so much public pressure, and you couldn't do it before? I mean, the whole question started there. Then we did the same survey a second time.
I just want to point out, though, this is fantastic, because what you've figured out here is which of the brokers have the most shares that they're connected to. So you can prioritize your efforts, and then you were able to address some of the big ones early, so that you can get that to happen. That was a difference maker. But this is great, because now we can prioritize which are the worst. Well, it's not called worst, right? They're just not ready. Don't know, but we know who they are. We know who they are, so we're going to make the changes.
Exactly. And that information, the raw data of the SurveyMonkey, anybody who's done with SurveyMonkey will quickly understand what I mean. You can actually import those into Google Docs or whatever you want to do. So I put them into Google Docs, and I sent that immediately to Tesla, and they immediately worked on that, with their proxy advisory firm, the solicitors on it, and that's how the whole thing started to break. And the same thing I actually did now. So in July, we did, after the vote, another nearly similar survey with little more technical questions, and the number of shares didn't matter that much anymore. So I really don't want to intrude too much into the privacy of people when it's not necessary. So at that moment, it wasn't necessary that we knew how many shares there were. It was more a question of were problems solved or not. And so it was about 14% of the initial participant number, but surprise, surprise, it was still the same names, right? So, and was still Germany on the top, it's still the UK at the second. So while some problems were solved and some people could vote, and obviously we had less participants because the big vote was over and the subject sort of, everybody was tired of it, including us. But it still proved that 403 participants could not vote, and those are the names that were still not making it possible. So I think that's interesting to know. And this data, as I said earlier, was sent to the IR department of Tesla as well. I don't know what they do with it, but I think it's a good thing they have it so that they can work on it. But that doesn't mean we shouldn't work on it either. And so that's what happens. So I analyzed these numbers. We can go quickly through them. Germany is a huge block, and I think we may get into that. And other than me, there's no German here on the table, so I can take the lead in saying I have the clear feeling that they are doing anything they can to not open up. We'll have a solution for that, but it's really crazy. The UK is mainly one huge account, but Bibik will tell us later that it's not only one huge account. We're having the Netherlands that are having some issues. Netherlands, Austria, and Germany is more or less the same block of issues, and then Australia, we have some other issues. But just want to make sure we all know that Germany is a huge issue. And then on the next chart, you see the reasons for the inability to cast the vote. So some of them made it extremely expensive. We have seen people that would have had to pay up to $300 to pay to vote, just because the bank pretended that, they will have to do it manually and this takes so much time and whatever. So that was a huge chunk of the people. The reason they didn't vote is because the price for it was so important. Some stated they just don't have any support for any foreign securities handling. Some said they had the custodian model that doesn't allow it, which is probably actually true. That was actually getting a little bit closer to the truth of what is happening. But the number of excuses were very colorful, if I want to say it like that, because most of those excuses are actually crap, but they are obviously putting those excuses out there so that they have a means of shielding themselves. So if you want to continue, please, Herbert. The next slide is, so we came up with some last-minute solutions. Some institutions found temporary fixes, but those patches are likely not sustainable long-term solutions. And the issues, as I showed on those charts before, they're not uniformly distributed. You can't say, it's all over the world. Certain regions and certain institutions are just very unwilling to take the right steps. If you want to flip one more, the awareness that certain accounts don't qualify was actually a surprise to many investors. They didn't realize that investing in funds and ETFs didn't give you voting rights. Now, there's some notable exceptions. 80% of the index funds, equity index funds from State Street, allow you to vote, but you have to take early action on those things if you want to have those rights. There are 5 Vanguard ETFs that also do that. That's sort of the overspill of the ESG movement. When the ESG people were screaming, they started putting this in place. So there's at least one good thing coming out of there. Then people realized that lots of their retirement investment accounts in certain countries could not vote. That was a big surprise to many people. They had thought that because they had them in retirement investment accounts, they could vote, and they could not. Then there are lots of products that are actually linked to insurance policies, performance guarantees, derivative products, and people don't realize that as soon as something structured is there, they usually lose the voting rights. So that was a big wake-up call as well. And then the biggest surprise of all was actually the margin accounts. So margin accounts, people, love margin accounts because they can borrow some money cheaply, or well, cheaply, that's another question, but they easily is probably the better word. They can take higher positions than the cash they have in there. But they don't realize that most margin accounts are set up so that the bank or broker can actually borrow their shares. And once they're borrowed and lended out, they may not have the voting rights anymore. So that was a wake-up call for quite a lot of people, that their margin accounts suddenly, that they stayed on their screen, it showed a number of shares, but they didn't have that number of shares as voting rights. So the problems came from all sides. It was a learning curve for all of us, including me. But it was a mess. That's just all there is.
Why is it even legal?
And
is
then
this even legal that if I bought something and I don't have the right to vote on my shares that I own?
Well, darling, the thing is that you may not actually own it.
I get the margin one.
We're getting
but the
there.
Other ones,
it is crazy.
Okay.
No, but even to others. I mean, there are only certain accounts where you really own your shares. All the rest is just an illusion of ownership, which is crazy. But we're getting there. So that's the main message, is protect your shares. And so how can you protect your shares? So in the immediate, just if you don't want to do anything else than that, at least listen to this list. Understand the difference between a cash and a margin account. You may actually not need a margin account. You just open a margin account initially because that's what your broker proposed to you. But what you probably only need is a cash account if you are not using margin. And in a cash account, you can much more influence and give an explicit permission not to borrow your shares. So if you're not somebody who wants to go into a margin and don't need all these fancy lending and borrowings facilities, maybe you should consider a cash account, and that will secure your shares at least better. There are better solutions, but let's start slowly. The second is, if you think you still need a margin account, read at least the terms and services. So I did that. I have 3 margin accounts. I had no idea. So don't think I came here knowing anything. I learned so much the last couple of weeks. So I contacted Schwab and Webull and E-Trade and asked them about the terms of services of margin accounts. And I did that about 10 days ago. I'm still waiting on Schwab and E-Trade. Those two just didn't come back to me. Usually they're there every half second, but not for this. Webull finally came back, and after 2 days and back and forth, they said, oh yeah, you can actually opt out of the share lending program. Here is the link. I clicked on the link, 404 error. I told them that the link wasn't working. It was crazy stuff. And but in the end it worked. So I could opt out of the share lending at Webull. So that's my third point, opt out of share lending programs. But that may increase your fees a little bit, but at least, you stop that share lending. There's been lots of discussions on X whether you should put in stop orders. It's not stop orders you should put in, but limit orders. If you place limit orders, it does prevent a lot of those brokers to touch your shares that you think are yours, but we'll get to that in a second, but at least that they can't borrow them. And so by putting those limit orders, but just also understand that just by putting one limit order, that doesn't do it. If they see that limit order is not moving for a couple of weeks, they ignore it. So you also have to manage that limit order and move around the numbers of that limit order so that it stays active. And then you have to monitor your account for any indication of lending activity, because when they lend, they usually pay you something for it. So suddenly you get $3. that is typically a good sign that you're actually lending your shares out. So that is for the immediate what you should do. But there are much better solutions. But if you at least want to do that, you're sort of at least securing that you have your shares and they're not lended away.
Before we do that, I want to clarify a few
ahead,
things just so I understand, right? So one is use a cash account. If you're not going to do margins, don't have a margin account. Understood. If you have a margin account, but I have zero, I've never borrowed margin, but it's a margin account, can they still take your shares and lend it out for shorts?
As soon as it's margin account, yes. But you can change it very easily from a margin account to a cash account with the same broker. But yes, if you have just your shares in a margin account and have not opted out actively from
even if you don't have margin, they have the right. So then what you want to do is opt out of the share lending program. So you have to kind of contact them, make that happen. And then the limit order, this is the idea, I think, that you would put an order in, but limit it for like some ridiculous high number of Tesla stock price so that it will never need to be sold for a long time. But at least because it's there, your the broker can't go and lend your stock. And the reason why it's important that you don't want them to lend is because that's what shorts do. Shorts will borrow your shares if you allow them to, and that's how they're able to, manipulate the stock price.
Exactly. And that's why I come back to the 10 million shareholders. We're actually in a unique position. If we're all disciplined of doing things, this is the first step. There are some other steps. We're uniquely positioned to really make a difference in this market. I mean, it won't be easy, and it really each of us has to do their part on it. And this is not there are no perfect solutions yet. We're working on them. We're hoping things improve, but we're going to discuss this over the next half hour. But the thing is, we're in a unique position with so many retail shareholders to actually spoil their game. And so if we do this rightly, if we educate, if the people understand what's happening, if they take ownership of their shares, then we can make a real difference. Okay, so in a margin account, your proxy voting rights can be affected. Now, I don't want to be too general because there are margin accounts at certain brokers where the proxy voting rights are not affected. It's very difficult for me, obviously, to generalize, but in some of them, I would even say in the majority of them, your proxy voting rights can be affected. So if your shares are lent out as part of a share lending program, which is the one that's common in margin accounts, you may temporarily lose voting rights for those specific shares. When shares are lent out, the voting right typically transfers to the borrower of the shares, and then they're gone, right? So there are a couple of things you could do if you really want to stay in a margin account and want to keep on lending is when you know an annual shareholder meeting is coming up, which is typically the same month than the year before. Well, not so much with Tesla because they sort of jiggle it around, but let's just assume it would be regular. You can contact your broker to recall your shares prior to that. The problem always is that actually the date of record only 2 weeks later. This year, the date of record was April the 15th. They published a proxy statement on April 29th. So that's too late because on April 15th, your shares may have been lended out. So the best is actually just to opt out of this whole share lending thing. And there is a much better solution we're coming to in a second. But if you're still in the system of margin accounts and wanting to lend out, well, be sensitive to when the shareholder meetings usually happen. Try to recall your shares and at least temporarily block them. And then the other thing is obviously don't use a maximum amount of margin. If you go to the maximum amount of margin, you can be sure that everything is lent out. That is just it. That's the way they function. And lots of people love going to the maximum of their margin accounts because they're so bullish on Tesla and want to take advantage from it. Well, that's part of the price you're paying for that. So the flaws of holding your shares with your broker. There are so many. And this is actually now material that I have taken from WhyDRS.org. So Bibik and Chives, please jump in anything I'm saying and clarify, because this is really where the part where we all, try to educate you together. So the big issue is that there is actually more float out there than 100% of the shares. We all know we have 3.189 billion Tesla shares. But actually, with this game of in your margin account, borrowing, lending, blah, 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 there is so much more around, right? And nobody can really put a number on it. So this is very disheartening. And maybe Bibik and Chaps, you want to add something here?
Sure. I could speak to it briefly first. And I guess before I do, I just want to say incredible work here to the entire Tesla community, pulling together in a matter of months and really developing a coalition around encouraging investors to embrace their right to vote and to research how they can not only exercise that right, but better understand the stopgaps that were in place that made that necessity a reality. So incredible work there. And we're so glad to be speaking with you guys in more detail about some of these nuances. In terms of what you were just discussing, Alexandra, how there can be more votes floating around than are actually issued by the company. I think this is something that people maybe are aware of already to some degree, but maybe the mechanics of it need a bit more explanation first. I don't know off the top of my head what the issued amount of shares from Tesla is, but this issue in the capital markets in the U.S. is true for any stock. So we could pick any number, right? Let's say a company issued 100 million shares. You've been putting great light on some of the circumstances around which shares in, for example, a margin account, a broker, a zero fee broker that is ultimately a for-profit company at the end of the day. One of the ways they've transitioned is through doing more securities lending from the accounts of their clients, and then using that to help pad their operations. Because it wasn't so long ago, just a matter of decades, that these zero fee point of service brokers was an impossibility. And now it's common, right? Every broker operates this way. So to connect the dots there, one of the many avenues for revenue is this lending. What happens when something is lent, though? Let's say you have 10 shares in your account, you're on margin, they're borrowed. Herbert, you were mentioning, short sellers will often buy these shares and then use those for shorting. They have to. That's like a legitimate short where they're locating it first. But your 10 shares, it still says 10 in there, right? So when they resell those 10 shares into the market, that's, we've gone from 10 million issued shares trading around to 10 million and 10, because that short seller has increased the effective operating flow of that stock. And this is, it's not uncommon. It's not even like an unknown thing, I think, if you're a financial professional, probably. And even something like if you look up publicly recorded short interest, it's a known factor of the float of a stock. But it is a crucial thing to think about, that when you are, if you want to apply, I guess, the basic armchair economics of supply and demand, the short seller knows that when they are diluting the supply through their action, that is part of their developed assurance that they're going to be able to buy those shares back. And this is where the short seller makes their profit, buy those shares back and fulfill their borrow at a lower price. And that difference is what they're walking away with. So I think the mechanics of that aren't exactly complicated, but sort of an under the surface thing that a lot of folks don't think about. And it's great to contextualize, how's the broker able to offer me this incredible zero fee service? And, what are the relationships that they have with these other profiting intermediaries? And what are they doing with my shares? I think are great things to think about. And, our place as retail shareholders in this ecosystem is so crucial to remember.
Yeah, completely agree. And there's obviously the other point, which is order flow, right? They sell our information, but that's another point, and can't solve the whole world in one show, but we're going to try. So
we'll
the
come
second
back.
point, so the dilution, exactly. So the dilution point is actually the first three lines. The dilution itself, the securities by the dilution losing value, and it just makes it so difficult for the company. So in our case, Tesla, to gauge shareholder sentiment, because you just don't know how many are out there and how many are going to vote and who is going to vote and where are these shares at the moment. So Tesla does not have direct access to this shareholder information for beneficially owned shares. That's actually the technical term. When you own shares at these brokerages or at these banks, you are the beneficial owner. Now, why is it necessary to say beneficial and not just owner? It is because you actually don't own it 100%. You're having a nominal writing of a number of shares in a pool of shares that are held with certain clearing houses, but you're just the beneficial owner. So in case of bankruptcy, or in case of, there are a couple of stress scenarios where it becomes very clear that as a beneficial owner, you're actually not a privileged person at all. So we're getting into some of those details a little bit later. Just take it from me at the moment. So, and another point you know me obviously doing all my surveys all the time and my letters to Tesla lately. That is a very informal and incorrect way of me doing this, right? Because usually what you should do is do real shareholder proposals, and then they would then be sent to Teslas. I mean, obviously I'm the little rebel I am, right? I'm not going to do this the way it should be done. But and I think times just have changed and nobody will do this in any way. But if I would do this the normal way, I have to go to the legal record holders, which in my case, for example, I think with Webull, it's Apex, and they have to bring forward it's not Apex, who is it?
One company, one single company owns all broker-held shares, and they're called Seed & Co. So the clearinghouse Apex, your broker, they don't own the shares either. They are given entitlements to the shares from Seed & Co.
Wow.
It's a headache, Herbert.
And then those brokers in turn give us entitlements to those entitlements. So it's kind of this, it's practically a Ponzi scheme or a pyramid scheme, essentially.
And that's so true. And the thing is, it all holds while it holds, but it looks like a house of cards, because you just wonder, if ever there is a major bankruptcy, Lehman Plusy, the whole card, including your Tesla shares, are going to fall just because it's so created on such a fine line of trust. And if that fine line of trust doesn't hold, and I mean, I was old enough to live through Lehman, that's going to be it. And then the other point where I completely was flabbergasted is that the 401ks and pensions are used for securities lending and collateral. So this is my point where there's no return, maybe because I'm a 58-year-old lady, but this is my thing, because I have most of my money in my 401ks, right? And it really drives me nuts. In my margin accounts, fair enough, I have a benefit, if I want to play with margin. But in my 401ks, I have nothing. And that these shares are allowed to be given out for security lending and collateral is really disgusting. So that was my point where I really lost it. And then obviously you all know, because some of you have made the experience, that securities can actually be moved to close your position, meaning that your agent or a broker can suddenly close your position without you doing anything, just because they felt that this was not necessary.
They can even close your entire account, and it's in the terms and conditions of the majority of brokers, and the language they give themselves for the circumstances to do so is so vague that they can pretty much work their way back and reverse engineer the reasoning post.
Exactly. It's absolutely crazy. And then the last point is, in case your broker goes bankrupt, and since Lehman, this is, I mean, obviously the old rule was never let a broker or a bank go bankrupt, right? But since Lehman has shown that it's possible, I just think we should not take that as granted anymore. And they have this, now they call it insurance, but it's not an insurance. It's the brokers have put themselves money in a fund, in this protection system, SIPC, that then covers each account for a maximum of 500,000. Now, I know a lot of Teslaonaires who have more than 500,000 in account. Do they realize is that if the broker goes bust, that the maximum, and that there's lots of conditions to not get to the 500,000, but the maximums they could get would be 500,000, right? So I just think people have to wake up to the risks a broker represents, and to the little security your account actually gives.
And a couple more stipulations with the SIPC insurance. The amount they will refund you is based on your initial investment amount. So say, a lot of people invested in Tesla 5 years ago, their investment has increased significantly. But if it comes to bankruptcy of their broker, they will be refunded based on their initial investment, not any of the gains they have made since investing. And also, if the SIPC deems that the broker has acted in a manner similar to a Ponzi scheme, then they will just not give you any of your money back. It's and from our perspective, that does seem to be the structure. With these entitlements that only one person at the very top can own, it's very similar to that kind of structure. So yeah, we haven't seen it play out yet, but we're kind of nervous to see how it might work. But yeah, so I personally, I don't even think about the SIPC insurance. I can't rely on it.
Yeah, that's exactly it. I mean, it's just it as soon as you look at it, you see the flaws, and you say, okay, well, how could I felt so secure for so long, right? I mean, I suddenly feel very uncomfortable with my 401k, the way it's structured. I feel very uncomfortable with my margin accounts, how they were done, considering switching to cash accounts, considering we'll get to the 401k solution in a second, because that's the most complicated, and I don't have a perfect solution yet. But it is, people need to wake up, and especially the Tesla retail shareholders need to wake up, because we're so numerous, we can make a change. They would all hate losing us, I can tell you that. It's one thing that, what happened with GameStop, and I'm very proud of all the guys that were involved in GameStop and fought that fight. But Tesla has a much bigger reach and can change things for the better. We really need to work on that.
Absolutely.
Okay, Herbert, let's keep on going. So first thing, this is a warning. Before you do anything now, just don't rush out. Look into tax implications. Because moving your shares, transferring your shares should usually not have tax implications, but you may move them from one country to the other, because lots of the solutions we bring to you are actually solutions also for people overseas. That's why it's so important to have Bibik here, who explains how he did it as a UK investor. But I don't want people to rush into anything before they understand what there may be tax implications. So just putting that warning out before we continue. So the solution that we think is the best, but has also its disadvantages, we're getting there in a second, is direct registered shares. What does that mean? Well, exactly what it says is you register your shares directly with Tesla. You're the 100% owner, and Tesla has mandated their what is called transfer agent, which in the case of Tesla is Computershare. The Computershare is the transfer agent for a lot of big companies, and WhyDRS has done a video on that, and I think you can play that video, right? Did I give you that link? I'm sorry. I thought it was in the
If you go to whydrs.org, it's on our homepage.
It is on our page.
It's probably the easiest way to get there.
And it's really short.
When you invest in a company, the shares are bought and held by your broker. Your broker is assigned these shares from a central depository's database. But the central depository keeps its name on the shares, which means they keep the property rights to your investments. This means that you don't own your shares. They're not even owned by your broker. Oh dear, this doesn't look good, does it? The property rights stay with this single entity at the top, and the individual investor is left with an IOU at the bottom. But you can change that by moving your shares to the direct registration system. The DRS pulls the shares from your broker, registers them with the official transfer agent of the company, and puts the shares in your name. This makes you the official owner of record. No other form of holding investments guarantees the same transparency, shareholder rights, and protection that the direct registration system provides. Every investor deserves access to the facts about their investment options. Learn more about direct registration system to protect your financial future.
Well done. That was wonderful. Thank you for creating that.
It's a lot of information to pack down. Like, we tried to get it to 60 seconds. It's just, it's a big concept to get across. But I think we managed it.
Yeah, and I want to really insist that neither Chives nor Bibik have any financial gain in here or whatever. They just learn by doing and want to help us to learn as well. So the nonprofit WhyDRS they've set up is really only there for education. So don't have any second thoughts or whatever. Educate yourself, then make your decision, and we'll get to what advantages and what disadvantages DRS has. But in my view, it's going to solve a lot of the voting issues we had, but it actually solves so much more. So let's get to the next slides, if you don't mind, Herbert. So this is also directly from the WhyDRS website. DRS, the direct registered shares, give you the security that your shares are with the transfer agent and stay with the transfer agent. So that's where they are. There is no, lending or whatsoever. Those are yours. So if ever, Tesla's case, obviously we don't expect that, but if ever, because you can do that for any of shares, you would be in a company that would get into bankruptcy or the broker would get into bankruptcy, you have a direct ownership. There are no more of these failures to deliver, questions, where are my shares? You have, a very clear track on where your shares are, and you're taking back the full ownership of your shares. Chives, Vivek, if you want to add
just
anything
to
here.
kind of expand on the failures to deliver, because I think it's a subject that goes missed often, because short selling is often the kind of sexier topic that everyone can kind of wrap their head around. But failures to deliver is just as common and just as big of an issue for voting rights, as well as shareholders actually getting what they paid for. There are all sorts of ways that market makers can facilitate trades without actually having any of the shares to provide. There's actually an amazing clip of Doug Siefer of Virtue, one of the big market makers, saying that if someone wants to buy 1,000 shares of a stock and they only have 200, they'll sell you 1,000 shares of that stock, and they call that size improvement. Which sounds great, but actually you're only getting 200 real shares, 800 are non-existent. And they can roll over these failures to deliver, and eventually they get put in something called the obligations warehouse, which basically they just sit and rot, and they just don't even bother dealing with. There a lot of these not companies, hedge funds, things like this, Citadel, is it Jane Street, State Street? I'm terrible with names. If you look at their reports, their filings, one line item on them is very interesting. It's called securities sold but not yet purchased. And in some cases, that's almost half of the value of the company. So this has been expanding over the last 5 to 10 years. It used to be, it was maybe 5% of the value of their company, and now we're up close to 50%, and it fluctuates around that 50% mark. But this is, again, how I don't understand how it's legal or how it's allowed. But ultimately, all of these companies, the DTC, CD & Co., which is made up of a board of these hedge funds and brokers, they've decided that liquidity is far more important than shareholder rights and actually delivering shares to people who have paid for them. So failures to deliver, definitely a big topic to be aware of as well.
Yeah. And I want to add to that, excuse me, Jeff, just a second. This is not only an issue for retail shareholders. This is also an issue for institutional shareholders. But I mean, I'm not going to solve their issues. But they should actually wake up, because they always live and respond to these questions by saying, we have a segregated account. Well, you don't. You may have a segregated account number, but that segregated account goes into the same pool up to the CD. So it's not at all an issue that's only limited to retail investors. But what obviously is the case is there's no other company that has so many retail investors. So that's why I think it is so important for Tesla to solve this issue, or at least for Tesla retail shareholders to solve this issue.
Yeah, that's absolutely right. We're so glad we can reach so many people with some of this information, which I know is dense, and we've got a lot to get through. I was going to add on to the failure delivers point that as far as the FTDs go, it's all about that settlement window. It used to be, long ago, there would be as much as like a week or 2 weeks, talking in the 60s and 70s, to make sure that you had shares where they needed to go. These days, just last year, it's gone, or was that earlier this year? It's what they call T+1 now, trade and then 1 day, and then it's supposed to have delivered these shares purchased. However, not only is that delivery not always guaranteed, as Vivek mentioned, it can roll over, eventually go to what's called the obligations warehouse, but also with the introduction and normalization of high frequency trading, there is just an absolute myriad opportunity to move that share around and try to profit off of it before the delivery window expires. Even though it's just 1 day now, just one trading day, the opportunity of trade that provides is still, magnitudes more than the 2-week settlement time decades back would provide to market incumbents. So that's important to think about as well.
Completely right. So what does DRS involve? Well, it involves transferring your shares from your broker to Tesla's transfer agent, Computershare. And then your shares are registered directly in your name on Tesla's books. So that's how it works. What are the advantages? you are sure to vote, and you're sure that your vote counts, right? Because that's another question. I mean, how many people have we had that actually thought, okay, I think I voted, but do I have any confirmation? Well, that's the way to be sure that your vote counts. It avoids any short selling with your shares. Now, your shares are your ownership. Nobody can touch them. It safeguards your shares. You're sure to have your shares delivered in your account. This is not about being in a pool and somebody says you have so and so many shares. No, now you really have them. You have direct ownership. It maintains also a direct relationship with the company. We get to that point in a second. Direct information of materials for events, for voting, are directly sent from Tesla's transfer agent. So people that have their shares with Computershare are the first ones to know about the votes, about events and everything, and they have the first information and first reaction. Investors can submit shareholder proposals alone. But I told you earlier, what I'm doing, but I shouldn't do it the way I'm doing it. So this is the clear way of doing it. Now you're a direct shareholder. Now you can write to your board. Now you can write to your executives. You are a shareholder in their books. And the transfer agent is obviously him being insolvent, or the broker being insolvent, is none of your issue anymore. You're an owner of shares, right? If Computershare would go bankrupt, not that I think there's any risk, but if they would, that has no impact on your Tesla shares. So those are the clear advantages of direct registered
I want to
shares.
clarify and understand this a little bit more. So my shares are right now in a brokerage firm, and I can buy and sell them. If I transfer them to this transfer agent Computershare, can still buy and sell them? Is Computershare a broker, or do I still use my current broker, but officially my shares are owned by Computershare?
So Computershare have a brokerage service, which is a subsidiary of the transfer agent. So Computershare, as the transfer agent, they don't have any of these broker functions, which is why it's impossible for them to lend, or any short selling to occur. It's literally just not feasible. But because Computershare, they're one of the largest, not every transfer agent offer this, and not every issuer decides to participate in this. But they offer purchase plans where you can essentially then use buy shares through Computershare using their broker and their relationships with multiple brokers inside the DTC system. And then the same with selling. So Computershare offers a sales service, and you can submit market sales and you can submit limit sales, and they execute immediately once the price is met, or in market sales it's immediate regardless. And again, that's through their kind of brokerage subsidiary, plus their relationships with multiple brokers within the DTC system. So there's much fewer points of failure there. But on the flip side, there are some fees involved because they're not profiting off the transaction. They don't play with your money. So again, like if you were to buy through them, you just give them a lump of money. You can't ask to buy a specific amount of shares. They just take your money, take it all to market, buy as much as they can, bring as many shares back to you, and usually you get a fractional share, which even in this case, the fractional share is technically an entitlement, but that fractional entitlement is on the company's ledger. So again, your voting rights to that is much more guaranteed than any broker can offer, because within brokers, there is literally no rights to fractional shares. It's all completely transparently shown to the company.
But what happens much more, Chive, maybe you want to explain that, is that people actually keep their broker, right? Maybe you want to explain that.
Yeah, I know that Bibik, everything you just mentioned there is accurate and super helpful information for Computershare specifically. A lot of other transfer agents, there are many. Now, Computershare happens to be the market leader. Many companies choose Computershare to be their transfer agent provider, but there are plenty of others that do not have the broker subsidiary, that they don't have the ability to offer these buying and selling privileges and opt-in options for the people that are holding through those clients. So what some investors may choose, since at WhyDRS, we are trying to provide information for, broadly speaking, all of the many thousands of companies that are trading in the U.S. markets. Many transfer agents, they don't have these options. Or if you maybe want to continue with the zero fee model and you appreciate how that works for you, you like being able to buy at a certain time, this kind of thing, which many investors do. these days, very understandably, then maybe you keep your brokerage account open with some nominal amount in it to maintain its solvency or
Oh, I
fluidity,
see.
whatever. Well, that might depend on the broker. Some want you to keep some amount of cash value in it, but you can keep that brokerage account open, continue to make your purchases or sales through that, and then the DRS is a two-way transfer system between the CD & Co, that central nominee holding that all the brokers are members of, and the individual retail shareholders who are holding in their own name. So, you, Herbert, as an individual, you could move your shares if you wanted to DRS some amount from the broker over to DRS. And then if you decide, actually, I'd like to maybe sell some of these, you can always transfer them back through DRS. And what that'll allow you to do is avoid the sale fees and give you a bit more. Well, with sale control, it's about the same. But if you wanted to move through your broker, you have that freedom to do so. It's a two-way street. So
Great. Okay.
Essentially, that's the thing to remember there. And that what I just mentioned there is going to be true for any transfer agent. Computershare, again, is in the minority where they offer some of these additional services. And noteworthy to mention that Tesla has opted in to those services. So Tesla shareholders who are listening that decide to maybe change their portfolio to a self-custodial model, they're going to have access to those planned purchases that Bibik mentioned, to the sales facility at Computershare. All that is present for them, and Tesla has set that up with Computershare already.
So you can actually do it all in there, because you have to know, transferring from your current broker to Computershare and back and forth, actually some of them, if I would not say the majority of them, of the brokers, makes you pay for it. So you have to think twice how you want to set this up. Tax implications, but also cost implications. Yes. I mean, I'm all for that we do as much DRS as possible. I think that's a really way to go. There will be more advantages to it. And like I said, this is only the first chapter on this. But think about the taxes, think about the costs, and don't say now straight away, okay, then I don't do it. No, please do it. Just, do your homework first. Let's get into how many are actually already doing it. At the moment, this is a nice chart. I think that Bibik or Chives, I don't remember, one of the two of
another
you.
Friend of ours on the team. He absolutely loves looking into this for all companies. He also loves to own certificates of all companies. So I think he's just bought possibly the first Texas-based Tesla certificate.
Yes, because they're new Texas. You're right. So anyway, so at the moment, there are only 9,300 Tesla shareholders with Computershare. So we're 10 million. We've got a way to go, but it's not bad, but it's only 0.1% of all shareholders. So we've got way to go. This number is published every year in the 10K of the company, of each company. So we will know exactly, how this number evolves. I would love to hear of some that are already there. Give us a little bit your experience. So if you're listening to this, and if you are already with DRS, share with us your experience, how it's going. But I mean, obviously, I do hope that we get many more people into the DRS at Computershare for Tesla, also for that close relationship. And now getting to that close relationship on the next slide. Oh no, it's not yet. The further advantages for this time, it's the advantage for Tesla as the company. Well, it reduces their cost of corporate action, meaning instead of having to pay brokerage and then having to pay, like this time we had the proxy solicitors and all the rest, here your shareholders. You can directly speak to them. It prevents this overvoting we said earlier, with actually more float out there than there's really. And so that is proper corporate governance. You know how I love that subject. The whole direct communication with long-term investors, it reduces the negative price volatility, because you're actually taking these shares out. It's protection against abusive short selling and over lending, and the ability to see shareholders' names, positions, and contact informations for Tesla, so they know that they have a direct and supportive relationship with their investors. And it just streamlines the whole ownership investor relations communication and way of being. So I think for a company, it's very clear that this is something they should strive for. And then on the next slide, I explain, this is the certificate that you can then become. This is actually one that Tesla has filed with the SEC. This is still a Delaware certificate, but they have published a couple of weeks ago in their proxy that you can now, if you have certificates that say Delaware, you can for free exchange them into Tesla Texas certificates. So that is what you get for your for your shares that are with the direct, and you can frame that and put them wherever you want to. I hope to see many of those. And then on the next slide, I have examples of some French and European companies that actually offer perks to their DRS shareholders. So the fact that the people hold them directly with their transfer agent, L'Oréal is giving their shareholders 10% higher dividends, invites them to certain exclusive events, and gives them rebates on products. Eurazeo and SEB offer double voting rights for those that have for a long time been stockholders with DRS. So I think we should actually come up with ideas what perks Tesla should propose, and I'm very happy to bring those forward to them and say, how about
exclusive
we do
events,
this?
invites, and we don't have to ask for it.
Right?
That's great.
I don't want dividends, of course not, but I mean, there could be so much
Flamethrowers
more,
for everybody who does this.
Right? Right? I mean, I can think of a lot of things, and I'm sure our listeners as well. So put in the comments what we should propose. And then we also get to the disadvantages. And so that's on the next slide. So the disadvantages of DRS is obviously in a case of bankruptcy, in very rare events, the number of shares and your personal information can become public. I mean, in a bankruptcy case, obviously it is, because you are now one of the registered owners, so you're in the queue for whatever is left. I mean, honestly, I don't believe Tesla will go bankrupt, so for me, this is not an issue. But you have to know that these registers can be seen. So this is something that some people may feel uncomfortable about it. So I want to make sure they know about it. Now, buying and selling, as we spoke earlier about, can trigger a fee, because we're not in this zero cost environment anymore where you are the product, right? Now you're not the product anymore. You hold your product. So obviously Computershare needs to make money on your transfers or your purchases. And then there is a second website. There's WhyDRS.org, but there is also, remind me what the other one is called, DRS.
So briefly to say, we got started in the GameStop community. Of course, our division has expanded to bring this advocacy and information to all shareholders, as I mentioned. Over at DRSGME.org, we have per broker guides for all around the world. And Bibic, you can speak more to this, but the short version is 150 plus brokers around the world. You can go there to transfer your GameStop. 140?
144 at the moment. Still
close.
Yeah.
You've done so much work on this.
So,
this is crazy.
It's the GameStop community that were the first to be like, oh, let's figure this out. And then I was able to access that community, ask them all questions, and then record that information to share with other people. And, we've got stats. Some of these guides have been viewed, tens of thousands of times. So lots and lots of people were needing help. And then one of them was for Fidelity in the US. And it's literally, you just log in, you go to the chat and say, I want to DRS my shares. It's that simple. But people just needed to see that it was possible. So we've had tens of thousands of people just come and see that that's all they needed to do.
Wow.
But yeah.
And as far as these guides on that website, just want to mention that our goal is going to be to have specific guides for every company, every broker, kind of cookie cutter, and have them ready to go on WhyDRS. Still in progress.
Yeah,
but
that's been my project for a while, but
it's ongoing.
Come up
if you want to help, reach out to us. Our email's on the website. But for right now, Tesla, you guys are lucky because you also use Computershare just like GameStop does. So all of our guides, all you need to do is replace the name GameStop with the name Tesla, replace GameStop CIK if needed with Tesla's CIK. And all that information is on our WhyDRS database, all of the per company information. So if you can't find it, you can pull it from our site and then just swap out some stuff in the guides manually if you want to take care of this now.
Brilliant.
Yeah, we're very lucky because it's all ready. So on WhyDRS.org, you have the basic information, and then on DRSGME.org, which was the one set up for GameStop, all that information is usable for Tesla shareholders. And that the second website explains, you put your broker in, you put your country in, and it gives you instructions how you can transfer your shares to Computershare.
Yeah.
If we would have had to do this now, this is years of work you guys have been doing. So it is
we have
for
these
us
guides translated into about 10 different languages. So, I mean, for Nordnet, we've got it translated into Norwegian, and French, and I think that's about it. But then for interactive brokers, which is a huge national company. We've got it into 10 different translations. So we're trying to make it as accessible as possible for the global investing community.
And I just want to point out, because this is so evident what's going to happen. If we en masse are leaving our brokers for the shares that we don't need in margin accounts, and if in the end we're getting to 401ks in a second, if in the end we can put all those long-term shares we have with DRS directly with the transfer agent of Tesla, Nordnet will wake up. They will not just find a temporary patch for this year. They will finally make voting possible. This is the type of pressure that works. The pressure that we put up on X middle of May was one thing that gave a temporary short-term patch, but to get a long-term solution, it is actually taking them where their money comes from, meaning the stock lending and the information on order flows. And so the fact that if you move the long-term shares that you can move because you don't have tax implications, worldwide you can do this, to the transfer agent, to Computershare, that's when people will wake up. And that's why this is such an important subject. But let's continue with the disadvantages, because there's still a couple. So transferring the shares to the transfer agent may be complicated and take time. So you guys found the solution for that. And I think the solution, if I call it right, was interactive brokers.
For non-US investors, interactive brokers seems to be the most reliable and affordable. Inside the US, there are many brokers that can do it for free and are very reliable. So I think Charles Schwab, E-Trade, two good examples. Fidelity is one of the biggest ones. But yeah, outside of that, there are some. I mean, in Canada especially, several brokers charge up to $300 per transfer. There's one, Saxo Bank, which covers a lot of Europe. They still charge $1,000 per transfer in some countries. It's actually in I think England now they've reduced it to $25 because it's a digital process. It's a click and you're done. It's really simple, but they've held on to these old fees from when you'd request a physical certificate. So like the certificate we looked at on the earlier slide, when you ask for that, Tesla's actually very good in making that affordable. I think it's $25 to get a certificate issued, but for some other companies, it's at least $100 because they're very official documents. But DRS is the digital version of that, and because there's no paper to be made, it's much lower overheads and a much simpler process. But it can be complicated and take time, especially outside of the US, because a lot of brokers simply haven't had to do it for a very long time. It's not been asked of them. So when I did it with a couple of my brokers, I actually had to explain to them how it works as an investor who, I shouldn't be the expert on this. It should be their transfer team. But between myself and a few other UK investors, we managed to get some UK brokers to actually start facilitating this transfer, and for free. Because the one that I use, the one I'm thinking of, is Halifax. It was on one of the earlier pages as well. You pay a yearly or monthly fee for the account, so they kind of take it out of that essentially. But then a lot of German brokers, like you were having issues with voting, they are so archaic. They are so old-fashioned. They do not want change. They love the way that things used to be. They want everything to be stamps and signatures and everything. So they just refuse often to even help facilitate this. So most people then have to move to interactive brokers, which has all these extra kind of services, and then you can transfer from there, and it's much simpler. It's just a short thing to fill out online, a couple of drop-down menus, and a $5 fee. So it behooves it's kind of. Begrudgingly, we recommend them all the time. I feel like we've given them a lot of business accidentally, but they're like across the globe. They're in every major country that these investors are in, and they can provide their service. So
yeah. So just for those that may have not understood, so you may have your account, I don't know, with Saxo Bank or whoever else it is. It may become difficult, and you've decided you want to move your shares to Computershare. Instead of doing that directly, which may come at a high fee and a long wait time, you first open an account with interactive brokers. The transfer between your broker and interactive broker is something that's standardized, should take 3 days, shouldn't cost money. So that's the direct link. And then once it is with interactive brokers, that's where you then move your shares to
And
the DRS.
so in the guides that we have, in instances where the brokers refuse to do a DRS transfer, we've got the information on how to transfer to Interactive Brokers, any potential fees involved, and the typical wait time. It should, like you say, only take 3 to 5 days. But again, a lot of the brokers that I used, one of them was Hargreaves Lansdown. Again, that was on one of the previous slides. It took 3 months and a lot of chasing up. And because of that, I was able to submit a complaint, get some, money out of it, which I then bought more shares with and directly registered them. So if you're patient and you're willing to put the time in, it can pay off. Worth it in my opinion.
Yeah, I use Interactive Brokers. I speak very highly of them. Thought they're a fantastic brokerage firm, like you're saying. So what I'll do is I'll put my referral link.Maybe this would work out for both parties. So I'll put my referral link on my.
There you go.
Yeah. And I mean, every time I've had to deal with Interactive Brokers customer service, I've had a good experience. Where I wish I could say the same with the other brokers I've used.
Yeah. So the two things that are not possible: margin trading is not possible on those shares that you have with Computershare, and fractional shares are not possible. And for international clients, this involves a bit more paperwork. So I'm talking about a specific form, which is a WhyDRS, which is the beneficial owner being a non-US taxpayer. It's not a lot of work. It's just something to fill out, and then they understand that you're not a US taxable person.
We also have a guide on how to fill out the W8BEN form on the DRSGME website, because again, it's just sometimes people just second guess what they need to put in some forms in some of the text boxes. So sometimes
Can I ask
it's nice
you guys to maybe create, sorry to ask you to do work, why don't you create a MyDRS Tesla website and move it out there?
That's what we're hoping to do with WhyDRS.org. It will fill the gap and then also do it for every single US company, all 16,000 of them.
Gotcha. You're working on it. Thank you.
Yeah, exactly. It's supposed to be we want it to be a holistic vision to help the investors of the many 10,000 plus public companies. And so the essentially to be an operating nonprofit entity, it's not like we can specifically advise about some specific company, but the resources are intended to be universal, so that they apply to any investor. And anyone who might be listening to this, I think your audience may mostly be Tesla. Maybe they have other stocks that they're also interested in that build up their portfolio, other companies they're passionate about that maybe they're thinking, I'd like to have a direct relationship with not just Tesla, but with fill in the blank. And these same resources, all the same information applies.
Yeah, it just so happened that the GameStop community got there first. We hit all the obstacles. We tripped over every little thing and learned as we went. So it's very fortunate that we can now bring that experience to the tech community.
It is, and we're so grateful. I mean, you guys have been great. You have Herbert. I monopolized them for 2 meetings to prepare this. They've given me all the resources. I mean, really great stuff. So one last thing is we did also a survey on broker recommendations. So there were about 1,600 people replying, recommending their brokers. So there is a link that Herbert is going to put in the comments, and we're going to publish also obviously on X to consult this survey. Again, if it is only a matter that you don't want to do directly registered share, then just move to a broker where you feel better treated than your current one. This is the way to go. It's sorted by country. You can search yourself. It's a Google spreadsheet. But came out of it is the 5 most recommended institutions worldwide were eToro. Now, do know eToro does not accept DRS transfers.
They don't do any form of transfers at all, and nor voting or many shareholder rights that you should have. But they are very convenient, so I understand why they're so popular.
Exactly. And then Fidelity, E-Trade, Charles Schwab, and Interactive Brokers were in the top 5. So, again, you may have to use Interactive Brokers as a bridge to Computershare. So that may be one reason anyway. You may already have, like Herbert, your account with Interactive Brokers, and now decide what quantity of shares you can actually put somewhere, tuck it away, and just leave them there. That is a great way of going for direct registered shares. And now I've hinted a couple of times on 401ks. So at the moment, Computershare does not have the facility to manage 401ks, right? Because obviously there's a whole tax aspect of 401ks. In an interview you guys did with the SEC chairman to tell us about all that, because the question of 401k came up there.
I believe, was that your question, Charles, when you... Oh, it was Miller's. It was Miller's. But yeah, it's very restricted. It's something I looked into for global retirement accounts. You know, in England we have ISAs and HISAs and LISAs and all, you know, similar to America. There's lots of varieties of the same thing. And essentially, yeah, because they are kind of sponsored, typically with 401ks, they're sponsored by an employer. The employer manages them for you. You don't really have any control over it. But there is only one form of retirement account in America and the whole world, which is this one account in America that can be directly registered, and that is a self-directed IRA. And even after all this time, we've been working on it for 3 years, there is only one company that we have found that is actively encouraging and assisting people in doing this. There was a second originally, but they got sick and tired of it, I guess because you know, there was a restriction of possibly share lending going on. We're not sure, you know, how they might have been making their money on top of fees they were charging, but for some reason they were very annoyed that these shares were then removed from their control. But yeah, there is one company called IRA Financial Trust. He's been excellent about helping people form an LLC to hold the IRA account, which then holds the shares, and then you will become the sole owner and manager of the LLC. And that comes with extra benefits because it being an LLC, it's limited liability. It can hold other investment vehicles and all this kind of stuff. But yeah, it is the only way to do it. It also has some drawbacks. You kind of have to mail in a form to request a sale with them, even though you are the sole manager of the LLC. So there are some extra hurdles to jump through if you want to trade. But yeah, self-directed IRAs are the one and only way to do it. And we were hoping that, yeah, maybe it could be opened up to more or give, you know, Computershare possibly the powers to provide IRAs, but that's something they have to work out with the issuers as well. I'm not sure. I'm working on it on lack of sleep at the moment, but I think maybe some companies do offer IRAs directly through direct registration as well. But in our experience, it is this one company, IRA Financial Trust. And of course, there are fees involved with that. There's a setup fee, there's an annual fee. So you have to weigh up, you know, if it's worth it for you. Same with if you want to have all your shares in DRS or if you want to keep some in margin to lend out. It's all down to your investing strategy and your risk tolerance. So, yeah, some people have chosen to actually remove their shares from their retirement accounts, put them into cash accounts. So again, thinking about tax implications with those, that's something people need to be very aware of. Yeah, the main way that most people have done it, I think, is to put them into cash accounts rather than jump through all the hoops of using this self-directed IRA. But yeah, with 401ks, you can roll it over into a self-directed IRA. Sometimes even with a employee-sponsored one, if you request permission from them, they may grant it, and then you're able to move it on. And yeah, I spent a lot of time working with some fantastic American investors figuring this out. I barely understand how IRAs work as a UK investor, but I just wanted to, you know, help get this information out to more people because it's very dense.
Yeah, I guess just to, that's a lot of great information there, and it can be a a lengthy process. But if an investor decides that they are interested in self-custody after learning more about some of these resources that we've really just touched on over the length of this call, then they can make these steps and decide to seek that for themselves. I just want to mention quickly as a to add on a little bit that what Computershare is not doing currently, and what they've said publicly recently that they have no plans to do in the near future, unfortunately, is act as a custodian for these retirement accounts. That's kind of the key word, that you need to have a certain entity which is acting custodian that is managing the assets within the retirement account. And what Bibik had mentioned about a LLC, if you form an LLC and you're the sole managing member, that LLC can act as the custodian for those assets. So, you're the only person involved in the chain, but it's kind of like one step removed, and you still have the self-custodial control. The only other thing I wanted to add on was that going through IRA Financial, they have been really great. They've got a terrific YouTube series, for example, on their website that kind of walks through some of these steps to self-custodialize and form an LLC and all this sort of thing. But you don't have to go through them if you don't want to. This is all stuff that you could do on your own. They just have, similar to us, they've built some resources. Of course, they also are selling a consulting service. So I guess I just wanted to mention that.
Yeah, that's true. And I saw an interview, I think it's the CEO of Computershare, where he was a bit tackled on the why don't you do 401ks, and you should do that. So I had the feeling he was sort of opening up to that. And I just want to see now in the next couple of weeks and short months whether there's actually interest in the Tesla community for these things, because if there is, again, I'm pointing out to this, we're numerous and we may actually change the financial world. So if there is an interest, I'm personally interested of putting my 401k. I'm not doing anything else with my Tesla shares in my 401ks than just having them lie around. And the fact that they could be used for borrowing drives me crazy. So first thing I'm actually looking into is making sure they can't be used for borrowing. But the second thing is, if there is enough interest, I want to reach out to Computershare and express that there is interest from the Tesla community in 401ks managed by them. And if that is the case, maybe we can change that and make them accept that. The second thing I want to do is reach out to Tesla for perks. And for that, I need your ideas. So please put in the comments what you would like to have as perks. I have no idea whether they will accept that, but who knows?
Let me go ahead and summarize what I've heard. Thank you for all three of you. Thank you for all the work you've done. This is very, very important, right? So this is not the last time that the retail shareholders for Tesla will need to come back and do votes. And so what we've experienced here is critical that we solve this. We are powerful. There's 10 million of us, and we already showed how powerful we are. But if we organize and mobilize like this, we can change the financial world. We can change and shape the future of Tesla. So first thing you guys recommended, I think is the easiest, would be to change your broker. If it's not one of these guys, or pick one, but these are the ones where they made it easy for you to vote. So, if that's one option, you can do that, correct? Just go ahead and switch this to this. Now, many European specific areas don't let you vote. They make it hard. So what you should do is go to DRS.org and learn how to change. And what you just heard today was move your shares from your broker to the transfer agent. And one way to do that is move your shares from your broker to Interactive Brokers first, and then from there request, and they make it easy to switch it to Tesla's transfer agent, which is Computershare. Now you own those shares directly. You saw all the benefits of doing that. You can now make sure you can vote. Now, if you are in one of those, the other things to think about is to move your shares away from a margin account. If you're not going to use the margin account, move it to a cash account. This reduces the ability for these, I don't know even what you said, but parties upon parties to grab your shares and sell it, or lend it. The other thing you can do is opt out of the share lending programs. You can contact your broker and bank, say that we don't want to be lended, and then there's probably an option for that. And then another one, I think this is just another, if you really want to get fancier, you can place these limit orders, make it really high. You won't sell the Tesla stock, but until a certain hit, a really high number, a ridiculously high number. And that way it's not going to be sold, but it tells the bank you want to reserve that, so you don't want to let them use it. So those are ways. Did I miss anything?
You did not, but it's actually not only a solution for international overseas Tesla holders, it is a solution for anybody worldwide. So US people that have shares in margin accounts that they don't use for margin, that either they don't want to move to cash accounts, or because they want this privileged relationship with Tesla, should consider putting them with Computershare so that they have them fully registered. It is also the only way to have full ownership of your shares. You don't depend on your broker anymore. You don't depend on Computershare even more. This is the only way for you to be sure you own your shares and you own them 100%.
If you guys can please give me a couple paragraphs, I'll include it in the description of the YouTube video. People can click on that, have easy access to the websites we talked about, to the information and the actions that they need to do. Thank you so much, Alexandra, the queen, Tesla Boomer Mama. And, you know, you led the group, and there's many of us who jumped in and helped it. We needed somebody to rally us. Don't mess with Tesla shareholders. You've got Bibic and you got Chives. Appreciate all the work you guys have done. Thanks, everybody. Anything else at the last minute?
I mean, if anyone has any questions for us, any questions about direct registration or, you know, the implications involved or anything like that, we are here to help. We just can't believe that this topic was so undiscovered for so long. It's been around for decades, and yet, you know, we've met tenured finance professors who have never heard of it before, and now they're going around meeting with other professors, teaching them about it. So we're just trying to get the word out there. We just want to help, because this, like you guys realize now as well, this is huge. This could be a massive shift in rights for shareholders worldwide. And I think
it is. And you guys are great. You really are.
Thank you so much.
And we're very glad that we're able to be here with you today, and here for the investors, you know, tomorrow and the next and coming years, because this is an incredible realization that we're all having about the ownership regime and the underlying truth of how it operates, going back for 50 years since the centralized depository was first founded here in America. But that's a whole other subject. So, we've got articles about that on site if anyone is curious.
Interesting.
More to come for sure. Thanks a lot for hosting us, Herbert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.